Hi, this is Atilla Yeşilada. I represent Real Turkey Channel, the best information and content source for those who really want to know what the hell is going on in this goddamn country. Today I'm going to talk about Turkish stocks. Turkish stock market is on a tear. I think it appreciated something like 20% in TL terms since the beginning of the year. And I'm going to make the claim that it's rallying for all the wrong reasons. Yeah. Why? By the way, I think I don't know the smaller stock exchanges in emerging market nations, but Turkey may be, the Istanbul Stock Exchange may be the best performer among major equity indices across the developing world. Well, what is the cause behind the rally? It's simple. Stocks are cheap, both on an EBITDA basis and forward-looking price-to-earning ratio basis. Turkish stocks were very cheap when this rally started. Two, they are the best inflation hedge. Turkish inflation was 6% in January. That's monthly inflation, gentlemen and ladies, not annual inflation. So, and the deposit rates are too low. So if you put your money in a bank, actually you lose purchasing power every month. The best inflation hedge for Turkish people was real estate, but unfortunately prices have run up so much that no one can afford it, except the very rich who already have plenty of real estate. So money is flowing to Istanbul Stock Exchange. I think over the last 2 years, the number of investors, those who hold any kind of stock portfolio, have increased from roughly 1 million to 7.5 million. It had peaked around 8.5 million at some point. There were 60 IPOs last year, and all of them made double-digit gains. I think at some point, it was a couple of months ago, the IPO index was up by 100 percentage points in Turkish lira terms. And a lot of people think the market is going to remain in a rally mode for the rest of the year. Essentially, Turkish investors, both institutional and retail, are no different than those who drive up S&P 500. They are pricing a soft landing scenario. What is the soft landing scenario? With respect to S&P 500, we know what it is. Fed is going to cut rates, so the cost of money is going to go down, which always makes equities attractive. Two, the monetary tightening as well as other shocks have not really led to a recession. American economy is going to slow down, obviously, in 2024 vis-a-vis 2023, but there shall be no recession. Recession is bad for earnings, ergo it's bad for stocks. So you have this Goldilocks world as far as the average bullish S&P 500 investor goes. You have falling rates, which should drive up valuations, and you have earnings forecasts which shouldn't decline too much, and then, in a year or two start increasing again. Thus, you're willing to pay outrageous multiples. I think PE in last 12 months earnings terms is over 30 for S&P. Now, Turkish investors are pricing pretty much the same scenario. Based on what the central bank has said during the presentation of its last inflation report, they believe that Turkish monetary tightening is over. It's not certain when the Turkish central bank will start cutting rates again, but according to a Reuters survey, as well as according to the survey of participants conducted each month by the Central Bank of Turkey, people expect the current policy rate, which is 45%, to decline anywhere between 5 to 7.5 percentage points by the end of the year. So, as in the case of S&P 500, interest rates have peaked, they will decline, thus the net present value of equities should rise. Two, as Mehmet Simsek promised, and in my view, very, very wrongly, that the current economic stabilization or austerity program will not lead to a recession. There will be some growth moderation, of course, and there will be growth rebalancing. That means Turkish GDP will not grow not primarily grow because of domestic demand, but because of exports. So if Turkey is not going to go into a recession because of the current austerity program, well, you have a Turkish Goldilocks scenario. You have interest rates peaking, and you have moderate to reasonable growth. You can add to that lower inflation, which I'm not so sure whether equities like lower inflation. There are a couple of studies which show that actual equity markets perform better in high inflation environments. I think this scenario is absolutely wrong. There are two paths going forward, and the branch on the road, the fork on the road is the 31st of March local elections. After that, Mr. Erdogan has two choices. A, he's going to say, well, okay, this is enough austerity, start cutting interest rates, and Turkey will grow too fast, and inflation will soar to 3 digits, at which point it would be impossible to maintain currency stability. We will have what is called inflation, currency depreciation, or devaluation spiral. Of course, higher inflation may not necessarily be bad for equities, and of course, higher growth is good for company earnings, but when you have a shaky currency, Turkish lira depreciating too rapidly or in an unpredictable manner against dollars and euros, that kills the stock exchange. That's the first path. Second path is Mr. Erdogan coming to Mehmet Simsek and saying, okay, elections are out of the way. I don't have any elections to fight for since until 2028, and that should be enough time for you to pursue a decent, honest-to-God stabilization program. So it's up to you. Play with monetary policy, play with fiscal policy, do whatever you need to do, but deliver me low inflation. What is the definition of low inflation in Turkey? By 2026, I want the headline inflation to decline from the current 66% to single digits. 6%, 8%. Doesn't make a difference. If that's the scenario, then current interest rates are certainly not sufficient to deliver such a result. Look, I know what the Taylor rule is. I know how it is used, but I haven't done the calculations. But I've talked to some respectable economists. Yeah, I do know a couple of respectable economists who told me that based on the Taylor rule, the optimal policy rate that would really start cutting inflation is over 60%. Currently, the policy rate is 45%. Two, Mr. Erdogan would also permit Mehmet Simsek to engineer a recession, if necessary, to bring down inflation. That's called the Phillips curve. Usually, inflation and economic growth are positively correlated. So, if economic growth is too fast, the typical central banker would think, soon inflation will start rising again, so I must tighten monetary policy. And of course, the corollary is, if you want low, stable inflation economy, the transition from the current inflation regime to a low inflation regime must, almost in all circumstances, require a recession. That will be engineered via higher interest rates, but also via a tighter fiscal policy. That means discretionary spending will be reduced. I don't know how it's going to be done. Probably, investment spending will be reduced, and salaries and pensions would have to increase slower than the forward-going inflation rate. This is the only way you can deliver the Goldilocks. But now let's look at what I have described. Economic austerity requires much higher interest rates than anticipated by the market, and a growth slowdown, possibly even a recession, which is bad for earnings. In that case, Turkish equities are too expensive. Moreover, since equities are an alternative to Turkish deposits, savings deposits, and you have a savings deposit rate, which is, say, something like 70% compared to the current 50%, well, a lot of those retail investors would sell their stock holdings and go back to holding TL deposits, or bond yields will rise and people would switch from equities to bonds. So no matter how you look at it, Turkish stocks have rallied too much. I'm not going to say they are too expensive. I've been in this market for 33 years. It's very rare that the stock exchange is bought and sold on valuations. This is a growth economy. It's a momentum economy. If Turkey is a sexy story like we have right now, if Mehmet Simsek is going to stabilize the economy, then people come and buy stocks. In Turkey's case, before deliverance, we must suffer through hell or purgatory for a while. Now, obviously, if you are a long-term, first of all, this is not an investment recommendation. I'm not qualified to give one, and neither am I smart enough to know which way the market is heading. These are just my personal opinions. If you're a professional investor, and if you're asking yourself question, yeah, Turkish stocks have rallied a lot. Is there still an opportunity, or should I wait? I would say no reason to wait, because probably your optimal investment horizon is a year. If you really believe that Mr. Erdogan is going to win the elections and permit Mr. Mehmet Simsek to do whatever it takes to stabilize the economy, you really are not concerned about higher interest rates causing a crash in the stock market, because that crash would be short-lived. Once the interest rates peak, within 6 months or so, Turkish equities would start recovering, and they would do so on a sustainable basis. And then Turkey's very cheap PE, I think the forward-looking PE is currently 7, whereas the emerging markets average is around 9, is going to be very cheap. So I do expect a correction in the stock market. It could mutate into a stock market crash if the currency becomes turbulent again. But in my base case scenario, we're going to have a correction. And then we're going to see Mehmet Simsek delivering much tighter monetary policy, possibly slightly tighter fiscal policy, which would, in the first instance, be negative for the stocks, but it would pave the way for a sustainable rally. Wow, I'm not used to talking about financial instruments, but I had to do this because it's topical. Well, thank you very much. Not too many people watches Real Turkey channel, and I don't really care. I have something to say, and I say it. And for those of you who have the time to comment, I really appreciate it. If you subscribe, or even better, share it with friends who are interested in Turkey, you would make me very happy. This is Atilla Yeşilara saying goodbye from a very sunny Istanbul day. And by the way, once again, my deepest gratitude to Mesele Economy, my co-producers in this video.